Good afternoon and welcome to the Omega Diagnostics Group's final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and will publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jag Grewal, CEO. Good afternoon.
Thank you, Paul. Thank you for the kind introduction and welcome to the presentation of the final results for FY23, which is the financial year ending 31st of March 2023 for Omega Diagnostics. I'm Jag Grewal. I'm the Chief Exec of Omega Diagnostics. I've been with the organisation for 12 years, originally starting as Commercial Director before moving into the Managing Director role of the Health and Nutrition Division, and then subsequently taking over as Chief Exec in 2022.
And I'm Chris Lee, I'm CFO. I've been with Omega now for just shy of 2 years. This is my third AIM-listed small cap stock as CFO within the last 10 years.
So this afternoon, we just want to take you through a brief introduction to the company. I'm sure many of you know a lot about Omega Diagnostics, but there may be people on the call who are unfamiliar with the organisation. We'll take you through the key points of business in the last FY, a canter through the financials, a business overview, and more importantly, a forward-looking growth strategy, and then ending with a summary, and then taking your Q&A session at the end of the presentation. So for those who are unfamiliar with Omega Diagnostics, we are now, haven't been in the past, but now solely focused on health and nutrition diagnostics. And in fact, we're a market leader in food sensitivity in over 85 countries globally and trusted by over 160 laboratories on a worldwide basis. We work largely through a distribution channel in global markets through distributors or business partners, as we tend to call them, who develop those food sensitivity testing markets in their own specific regions. And those partners then sell our kits and our systems through to laboratories, clinics, healthcare professionals, and ultimately the healthcare consumer who is wanting to be tested for food sensitivities where they may be suffering with a chronic long-term inflammatory condition, which is often related to poor gut health, and they wish to improve their condition and wellness going forward. Our key products and our key brands in the marketplace, the first one is Food Detective. This is a point-of-care or near-patient test that can test for reactions to 59 foods as a positive or negative test that can be run in clinic without any specialized equipment at an entry-level price for the marketplace. The bulk of our revenues for food sensitivity testing is the footprint system. This is a highly specialized microarray which allows a test to be run off a couple of drops of blood off a finger prick sample that can test, analyze, and quantify reactions to over 220 different foods. And these are testing for antibodies, long-term antibodies or IgG antibodies that have been built up over time to foods that really shouldn't really be in the blood system at all, and is really a root cause of poor gut health. We have foodalizers, which are basic laboratory tools used in many labs around the world. This is actually a small part of our revenues to date, where the bulk of our laboratory sales are the foodprint kits. And actually, we've taken a decision to discontinue that shortly due to the low level of sales and transition of our customers to foodprint testing. Here in the UK, we have our own laboratory based at our site in Littleport in Cambridgeshire, and that uses our foodprint technology to run tests for customers in the UK, largely focused on healthcare professionals such as nutritionists, naturopaths, and functional medicine doctors. In terms of a brief summary of the last financial year, we'll take you back to May, June, where we were still restructuring the organisation, exiting from a site based up in Scotland and moving out of a global health area, which is largely focused on infectious disease, COVID testing, and HIV monitoring. We were successful in raising funds through a placing and open offer, which happened in May, June of 2020. And those funds allowed us to restructure the company, as well as give us a bit of time to sell the CD4 product, which at the time was being made under license at our previous site based up in Alva, Scotland. We completed the sale of CD4 in July 2022, and later on that year received the proceeds of the bulk of that sale, £4 million, which were contingent on a successful WHO evaluation in Kenya of the CD4 test that allowed that product to remain on market and be pre-qualified for purchase by aid agencies and NGOs. In March of 23, in coherence with our key strategy in providing a digital platform, we launched in the UK My Health Tracker, the digital app that we will roll out across other countries and other markets in due course. It was also pleasing to see that our major Chinese partner, who was 2 years ago buying Food Detective for the Chinese market, recommenced their ordering after a bit of a lull, and a lot of that was down to lockdowns and COVID in the Chinese domestic market. But we're very pleased that they've recommenced their deliveries and have a strong outlook going forward. However, in Q4 of the financial year, as I'm sure those who've been following the company are fully well aware of, we experienced lower than expected production yields for our food print product line that resulted in an increase of loss and lower than expected revenues. This was very unfortunate and not so good for our financial results in the prior year, but we acted very, very quickly and implemented, with the help of a consultancy firm called Chartwell Consulting, a recovery plan that today is now giving us strong results, much higher yields, as Chris will explain in a minute.
Okay, so thank you, Jag. So just to cover first of all the income statement for the year, very much in line with the trading report that we put out in early April. Revenues of 7.5 and a 2 million EBITDA loss. The revenues of 7.5 should have been higher, but for the production issues. Our order book strengthened very significantly from one year to the next, and we entered this financial year with an order book of 2.4 million, £1 million higher than prior year. And that really is reflecting the delay in our ability to supply customers with food print products as a result of the production yield issues we encountered over the winter. A knock-on effect of that was our high levels of scrap. So a lot of tests we were producing were failing in the quality control process. That scrap hit the margin. We also had additional labour costs in terms of trying to ramp up our production and trying to work our way through a backlog of quality control checks on our food print product. Our administrative costs were a little bit higher. Bear in mind that this year, all of the admin costs for the business are having to be absorbed across the health and nutrition division. In the past, certain overheads were covering both divisions, and the cost was split between our global health division and our health and nutrition business, particularly service functions like finance, HR, regulatory to a degree, were servicing both divisions. Now all of those costs are sitting within the health and nutrition continuing business. Just draw your attention to an exceptional item for this year, just over £500,000. This relates to the planned relocation to a new purpose-built facility in Ely. The landlord is still struggling to be able to complete the building to the agreed specification, has run out of money. We don't believe actually we're going to be able to take possession of that building anytime at all, and as a result we have taken the decision to write off all the cumulative costs that we've incurred in terms of equipment, in terms of legal fees, in terms of design costs relating to that site, and I'll talk about that a little bit later on. And finally, in relation to the P&L for the year, we have a discontinued activity line, a loss of just under £700,000. That relates to the CD4 business trading from April through to July in 2022. And you can see from here the knock-on effect visually in terms of those numbers. Revenue down 12%, primarily due to the shortage of available food product. The gross margin being hit primarily by increased raw material costs and scrappage costs, and an element of additional production labour as we tried to catch up in terms of production over the winter. A knock-on effect then to gross profit percentage, which has dropped by about 13 points year on year, and that is expected to reverse in the current year as we improve our production yields very significantly. And the net result was a 2 million EBITDA loss compared to a small profit in the same period last year. Turning to the regional sales analysis, most markets were down as a consequence of the product availability for food print, with two notable exceptions. One was our UK market, where our lab sales in the UK doubled virtually, 95% up year on year to just under £1 million, and that's down to a successful partnership with an agency that works in a direct-to-consumer market, using a white label product to drive demand, using their skills that we don't have in marketing directly to the consumer. We've seen significant growth in our UK lab testing volumes, and we're expecting further growth of around about 20% this year in that space as well. And finally, on the right-hand side, a doubling in terms of our revenues from China. As Jag referred to earlier, our Chinese partner has commenced reordering after a 2-year gap, and actually China was our individually largest market during the course of 2022-23. From a product perspective, again, food detective sales on the bottom up, that's driven by China, 42% up year on year, and food print sales down due to the inability to supply product towards the back end of the year. One point just to highlight in terms of our production and our pricing, we sell 16 pad kits, we sell 4 pad kits, and we sell 1 pad kits. The cost of producing a 16 pad, a 4 pad, or a 1 pad is broadly the same. What we used to do was use our byproducts, our failed QC slides for the higher value products as 1 pad kits and sell those to the market. With the improvement in yield we've seen post year end, we're no longer getting the right quantity of 1 pad kits available. So what we've done is increased our prices significantly to try and drive customers towards buying higher value added products that are more profitable for us as a business. So as Jack touched on earlier, we've seen much lower than expected production yields within over the winter. Really that fell off quite dramatically from October last year, but has really been running lower than we would like for quite a long period of time. Chartwell Consulting have been in, they joined us in February, they left us in June to help set up new processes, new procedures, new KPIs, to train our staff in the troubleshooting methodology within the manufacturing process, with a key objective to A, improve yield, and B, to improve the QC turnaround times within our manufacturing facility so that we can get product out of the door a lot quicker. Those core skills are now embedded within our manufacturing team. We've made some changes to personnel within our operational structure, and we now have a very good level of expertise and troubleshooting within the food print technology area of the business. Draw your attention to the graph at the bottom here. This is a 4-year trend in terms of food print yield. You can see the peak of the yield previously was April 2020, I don't think it's a coincidence that that's just when we went into lockdown and with fewer people on site, social distancing, etc. We certainly suffered, I think, in terms of the yield that we were achieving throughout the lockdown period, stabilized at a lower level, unfortunately, during 2022, and really fell off quite dramatically from October 22 to a low in February this year. The green bars on the right-hand side are showing the improvements that we've been able to make as a result of the Chartwell project, some of which are down to Chartwell being on site, some of which are down to our own operational teams taking responsibility going forward. I expect the final bar on July to increase a little bit because we haven't got the results of all the July production through quality control yet, and I would expect to see a higher level of production coming through in that final bar on the right-hand side. But essentially, the objectives of the Chartwell project to recover yield to better levels, to reduce manufacturing QC lead times have significantly been achieved. And actually, our internal team are setting an internal target higher than the original Chartwell project with a view to improving the yield still further. Just trying to illustrate this in terms of current performance levels, I draw your attention to the purple box towards the bottom right-hand side. This is comparing the original Chartwell plan, which is the dotted blue line at the bottom, with our solid blue line, which is our actual production. So you can see, really, since the middle of April, we've been producing at a higher rate in terms of finished product yield than the original plan. The original plan was set up to enable us to deliver or fulfill the order backlog that we came into this year with and meet demand within the first half of this financial year, so that we no longer have orders that have delayed in terms of delivery by the end of September. And we're on track at the moment to be able to deliver that. In terms of our new site, so those people who've been following the business for some time will know that we've long been intending to relocate to a new purpose-built facility in the Ely area. The landlord has run into some issues in terms of financing the project. The build is not complete to the specification that was agreed. There's another £1 million to spend to bring the facility up to scratch, and the landlord does not have sufficient cash to be able to do so. With the passage of time as well, the site is larger than we would ideally like, and we are now talking to the landlord about how we extricate ourselves from the lease in exchange for a cash sum to provide the property back to the landlord, and we're looking at alternative sites. In the meantime, we have extended the lease on our current Littleport site until June 2025, which gives us time to assess whether we wish to go to a new purpose-built site or convert an existing unit. But it's clear that within the next couple of years, we will need to find additional space because we're too cramped in the facility that we're in at the moment. The production flows are not ideal within the layout of the facility, but we certainly don't need something as big as the originally intended building that you can see in the picture on the screen. At the same time, we've been reassessing our core slide printing technology. We use currently a kind of contact printing where we're using silicon pins to print the foods onto microscope slides. That's been part of the challenge in terms of the production yield, where machine settings have not been able to cope and have caused quality control issues to be seen in finished slide manufacturing. We've been evaluating some contactless printing, some new technology which is available, which we think will give us significantly higher production yields, will be a much lower operating cost in terms of labour to run the equipment, and will provide additional capacity over and above what we're going to need in the next couple of years. We're currently assessing that technology. We're running a number of feasibility studies to make sure that they can print and replicate the slides to the same standard or better than we're currently doing. We'll be making a decision on that in the next 4 to 6 weeks, but it's likely to be a capital expenditure around about £1.5 million over the course of this winter, expected to be roughly half of which is expected to happen in February, and the balance in the first quarter of next financial year. But this is core to being able to improve our yield, to improve our efficiency, and to refresh our aging technology into a much more modern and efficient production system. In relation to global health, as you know, we've recorded global health as a discontinued operation last financial year and again this financial year. As Chad touched on, we sold the business for 6.3 million, so 5.3 million paid up in cash for inventory and for fixed assets and for the intellectual property, all of which was banked last financial year. We have a trailing royalty on CD4 sales, which continues to 2026, capped at £1 million. It's currently yielding more than £50,000 per annum, but we're not privy to the growth plans of AcuBio over the next few years. But to the extent that they are able to improve revenues from the sale of this product, we have an element of participation at a 4% royalty on everything they sell for the next few years. And finally, the DHSC dispute. Since December 2021, the Department of Health have been asking us to repay the £2.5 million of advance funding for our Alva-based COVID lateral flow test contract. We've been exchanging a number of letters over the course of the last 18 months. We finally managed to mediate at the end of April, where we sat with representatives of the Department of Health to discuss their claim and our counterclaim, because we've made a substantial counterclaim for additional losses in relation to the contract. The situation fundamentally is the contract that we signed was to provide manufacturing capacity for the Department of Health, and the onus was on the Department of Health to find a test, license the test. We would manufacture that, and we would achieve a fixed margin on manufacture for the government. Unfortunately, the government did not manage to license the test at the outset and did not tell us that they'd failed to license the test at the outset, deeming us with a cost base that was too high for too long. Through mediation, it became apparent that our position is a lot stronger and the department's position is a lot weaker in terms of the negotiations, and we are increasingly confident that we will not be required to make a payment of any of the £2.5 million to the Department of Health. And in fact, actually, we are now intending to pursue our counterclaim more vigorously against the department to try and recover some of the losses that we incurred throughout 2021.
Great, thank you, Chris. I'm really looking forward to what our growth strategy looks like. I'm sure many of you have seen this before. We've got a leadership position for food sensitivity in many markets. In a market and a healthcare environment where gut health, nutrition is increasingly prevalent in people's thought processes. Wherever you go, there are free-from foods. There's increasing levels of article on the role that gut health and nutrition plays in chronic inflammatory long-term conditions, as well as maintaining wellness amongst our consumer healthcare population. We need to carry on doing what we're doing. The demand is there for these tests. I guess on the back of COVID as well, people are much more used to diagnostic tests and sending off tests to laboratories to get results to manage their health going forward. We want to embrace digital technology to further drive that awareness and connect it to the healthcare consumer. So we're going to do more of what we do today. There are specific geographic targets we wish to address, one of which is the US, and the other one is to carry on the upward trajectory of our business in China. And then the third area is adding menu to our existing basket of goods. We have a leadership position in the marketplace. There are demands for additional tests that we're looking to commercialize in this financial year. And the first step in the direction is with our digital platform, My Health Tracker, which was launched in the UK in March 2023. This is a healthcare profession-led app-based system where then the healthcare consumer they're working with is invited to log on and load their own consumer version of the app. And this is so much more than just an ability to share and review test results. Its key component really is to help the healthcare professional manage their patient. It becomes essentially the clinic's patient management system that connects and binds the healthcare consumer, the patient, to the healthcare professional over a much longer period of time to enable better healthcare outcomes. So we've launched initially in the UK, and we're looking then to roll that out into various markets in priority order around the world. The key benefits of the system, beyond just a results system, is to enable that relationship with the practitioner. We're able to track wellness, we're able to track symptoms, we're able to track the test results and link them to what symptoms we're seeing. And from a scientific point of view, that's incredibly valuable data, but also from a commercial point of view, that's incredibly valuable data. It becomes effectively our Tesco club card, understanding what tests are done where around the world and on what basis has that consumer decided to order those tests accordingly. That brings a range of commercial benefits to the organization. First of all, it further increases the barrier to retaining our lab partners versus the competition, as we're adding a lot more value into the relationship. And we're really moving beyond a very classical, we're selling a system and kits to laboratories like some of our competitors do. We're adding value and we're driving business to many of our labs and our healthcare professionals around the world. It allows for increase in testing, repeat testing and reflex testing to different tests that are complementary to what we're doing today. And should we want to, having a greater understanding of our business in particular markets, it allows us potentially in the future to improve margin and go more direct in key markets in the future. Geographic growth is important, and already in the prior year, we added to our range of footprint installations and added 11 new laboratories to our laboratory base, and we appointed new business partners in 8 new countries, taking our coverage to over 85 countries. But all within that, we're really targeting business in the US, and we want to carry on the growth trajectory in China. In terms of the US, we're already planning 2 installations in the US, one of which has already happened. Both of those installations are laboratories who want to move into the food sensitivity testing arena, which is complementary to their existing customer base and existing test menu. And we are currently in discussions with a third laboratory, which is already a significant player in the food sensitivity testing arena. And then, as is quite typical in the diagnostics industry, is once you've got a position, a very strong position in the marketplace, how can you add to those basket of goods and provide even greater value to our customers going forward? And clearly, what is being demanded from the marketplace today, the marketplace that we serve, is microbiome test results and nutrigenomics test results. So microbiome, for those who don't know, is an analysis of the gut flora that you have, which has a major impact on health in the body, and increasingly being linked to a wide range of chronic long-term inflammatory conditions such as IBS, migraines, skin conditions, etc. Nutrigenomics is the study of your DNA, and looking at your DNA and looking at those genes that have a direct impact on how you process food and how you metabolize food going forward. We reported last time that we signed heads of terms with 2 separate report providers, and this business model is quite different to what we do today. Today, We manufacture kits at our facility in Littleport in Cambridgeshire, and we export those kits out to all those 85 different countries, which are then used by our lab providers. This is a testing service, so we'll be commissioning a third-party lab, a genetics sequencing lab, that will do the testing for us, and then those results will be put into a portal that will generate 2 unique test reports that will then be marketed to our healthcare professionals around the world. So effectively, it becomes a paper reportable business, which is quite different to what we have today, but we then move into the arena of being a digital service provider for 2 essential tests that are highly complementary to what we look at today, which is the immune function or food sensitivity at the moment. So in summary, as a business now, having sold CD4 in the prior year and removed that as a product line, we are now focused exclusively on health and nutrition, and what's increasingly being spoken about is personalized nutrition testing. It's a very exciting market to be in and very, very prevalent to many long-term conditions that people are wishing to improve on. We're well capitalized. We have a strong balance sheet and cash in the bank, having divested the CD4 business. But there is work to do. Work not only in terms of embedding those new skills and improving our efficiencies and yields in our manufacturing team, but also building a new team and culture in our Littleport and Ely manufacturing site. We are transferring, creating new teams in finance, HR, and regulatory, and we need to embed them into the new business as a standalone business and move out from what was a divisional structure in a group organization. We have a singular focus on health and nutrition going forward, and the great thing is we can build on our existing global leadership position in what is a very exciting marketplace, and we do lead that marketplace and differentiate through science and education, through our webinars and our papers and our engagement with key opinion leaders all around the world. And once we've got that foundation in place, we are able to target the new geographies, particularly focused in on the US. We can build out China, where the reordering has recommenced, which is great news. And then we're able to add menu to those well-established, well-honed sales channels in terms of microbiome and nutrigenomics. And what links all that together is a digital spine with My Health Tracker that will bind us to our lab partners around the world, healthcare professionals, and ultimately the patients that we serve in this area. So that's us in terms of a summary. I'll hand back to Paul.
Fantastic.
Take us through some Q&A.
Chris, thanks indeed for the presentation. As you can see, we've had a number of questions through today's presentation. Thanks to all the investors for submitting those questions. Perhaps I can start with the first one here. Can a director explain why the market values the business so lowly? Currently around 6 million, yet when the company has circa 5 million in cash, this means the projects are valued at nearly zero.
After that, in a nutshell, no, not really. I think for those of you who were on the call 12 months ago, I think the same question popped up, and I expressed my view that the business was significantly undervalued at that point, and it still remains the same. I think there are a number of factors that are impacting that at the moment. We're in a bear market generally, but we have a couple of specifics, I think, that are impacting the valuation of Omega at this particular point in time. Firstly, we have an overhang of a potential £2.5 million claim from the Department of Health, notwithstanding the fact that we as a board don't believe that that will turn into a genuine liability and a cash outflow. I think there's an element of that overhanging the business, and until we get resolution, that will probably continue to be part of it. I think as well, we have a number of warrants, 90 million share warrants outstanding, going back to the placing from May, June 2022. Those warrants expire on the 9th of November, and I would expect that might have some sort of benefit overall. Fundamentally, I think, though, we need to start delivering results that are in line or better than the forecasts that are out in the marketplace. And I think until we have a track record over a period of time of delivering results, I think there will always be an element of discounting and disbelief, perhaps, in terms of the numbers for this business. What I would say is we are a long way on fixing the issues within the organisation. Some unexpected bumps in the road, particularly around the yield for last year, but we're working hard to improve the quality and professionalism within the business as a whole and to deliver results on behalf of our shareholders.
That's great. Thank you very much indeed, Chris. That kind of covers off the next question I can see here. Does the board expect the 4p warrants to be exercised before expiry in November? I know you have touched on that there. I don't think there's anything, if there anything further to add.
I think the warrants are at 4p. The current share price is around about 2.5p. I would be very surprised if anybody exercises a warrant in the near term. So I think they will probably expire. But ultimately, it's the shareholders' decision as to whether they wish to exercise those or not. But I would be very surprised.
That's great. Thanks, Chris. What we've got here, given the low value of the company, does the board of directors consider a takeover approach a possibility?
I mean, where our share price is, we are vulnerable, and we're a public company, so that's always a possibility. However, where the share price is at the moment, we would certainly not be able to recommend a low ball offer, and it's certainly, if we did, it wouldn't be voted by the shareholders. So, yeah, it could be, but it's very unlikely.
That's great. Thanks, Jag. What was the what's the rationale behind the name change to CNS?
I think, going forward, as we said, we are a nutrition testing company, and the main rationale behind that was to draw a line under legacy business. We call it discontinued business, and I think this will be the last presentation we will refer to discontinued business. We want to be looking forward. We want to be talking about our value proposition in the marketplace, and I think we should be named accordingly.
I think as well, Omega as a brand is tarnished with the COVID story. We've had a number of businesses that we've been in and gone over time, allergy being one, COVID being another one, CD4 being another one. I think the rebrand is better describes what we as a business are going forward. We use the CNS Lab brand you'll have seen throughout the presentation for our own lab testing service. That is Cambridge Nutritional Sciences Lab. Our business partners around the world associate Cambridge with science and education, and we want to take advantage of that within the marketplace, albeit we go to market with strong product brands rather than a corporate brand. But CNS, I think, as a name, gives us better describes what we as a business are today and intend to be in the future.
That's great. Thank you very much indeed, Chris. I've got a question here. It kind of ties in with Charles B's question that he's talking about My Health Tracker. Please, can you elaborate on the reasons for the implementation and the realistic expectations? And that kind of ties in with a couple of other questions. Just really looking for what can we expect to see?
Yeah, so we're focused as a company on the healthcare professional being linked to the healthcare consumer. We're not a direct-to-consumer marketing company. That's why we partnered with a white label product or a partner in the UK to drive some of those UK volumes in the prior year, because they have the skills and expertise to market via social media, online, and through celebrities. We very much believe that better health outcomes work through the healthcare professional linked to the patient. So the digital platform, My Health Tracker, will be rolled out through healthcare professionals, and the patients that they serve will then be invited to enroll by the healthcare professional to then form a relationship online to get that patient managed much more effectively on the back of the test results, which is the start of their journey to better gut health. Our rollouts, we want to obviously cement a position in the UK. The reason we went live In the UK, it's right under our noses. We understand the market better, and obviously we're direct in the UK. And then what we'll do is select those low-hanging fruits where there are opportunities to implement My Health Tracker in some of our global markets to bring that benefit to our lab partners in those markets accordingly. And then ongoing, there'll be translation, so we'll be able to address those markets further down the line in different languages.
Fundamentally, our customers believe that this as a tool will help them drive volume in their own markets, which will in turn drive volume for us.
Thank you very much indeed. You mentioned production in the presentation, but what have you put in place? With a question here, what have you put in place to mitigate any production problems occurring again?
I think on the tail end of the consultancy, we were very keen to implement the embedding of that learning, not only in the teams that make microarray, but in the teams widely across our manufacturing site as well. And we're seeing the ongoing results of that with further improvements in yield, with Chartwell having left the premises effectively, as well as improvements in other areas of the business. And the teams themselves have identified further opportunities for improvement. So that will deal with the yield improvement and stabilization in the short term. As Chris presented as well, longer term, we also need to replace some of that aging technology, and we have engaged a potential supplier of new printing equipment to eventually replace that in due course.
Thank you very much. What rental costs have you budgeted for in looking for a new facility in Ely, Cambridge?
Well, existing unit, for existing units, there is a possibility to put a mezzanine level in that would reduce the unit cost per square foot for those facilities. So right now, we are budgeting to stay on our existing site for the next 12 to 18 months. The rental cost of that is relatively modest. It's only £110,000 a year for that particular site. New sites will be evaluated and compared to make the right commercial decision for what we see as the business going forward.
Fantastic. Look, Jack, Chris, thank you indeed for addressing those questions from investors. And of course, the company can review all questions submitted today, and we'll publish those responses where appropriate to do so on the Investor Meet Company platform. Jack, if I may, I know we've got the summary on in front of us now, but if there's any further comments just before we redirect investors to give you their feedback, which I know is particularly important to you and the team.
Yeah, thank you very much. Well, firstly, thank you for the people online in giving us an audience. We did have a tough final quarter, which had a major disappointing impact on our results in the final year. But we've learned from that. We've generated a greater degree of resilience in the foundation of our business going forward. We are building out new teams and new skills as we speak. But let's not forget, we have a very important business only focused in one area and not distracted by other ventures. We are a market leader, and we've got exciting growth opportunities from that foundation.
That's fantastic. Thank you both for updating investors today. Can I please ask investors not to close this session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of Amiga Diagnostics Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you very much.
Thank you.